Good afternoon and welcome to the Standards Conference and Awards Session 6 on Governance of Organizations. My name is David Adamson. I work for British Standards Institution, and I'm pleased to be here with Dr. Axel Kravatsky. I'm going to facilitate, I'm going to say 5 minutes or so before handing it over to Axel. But wanted to say that we have a timing of say 40 minutes, 45 minutes for this. So the way that we'd like to do it is if you have any questions and you want to put them into the Q&A, not the chat, I think the Q&A for questions, I'll monitor that. Axel is our expert on governance, so we want to give him as much time as possible. So I'll be brief. But before I hand over to Axel, I did want to mention for those of you who are not committee members, and I appreciate that many of you will be, given that this is a standards conference and awards, but to remind you that BSI is the oldest national standards body in the world. This photo shows the founders of the BSI group, the Engineering Standards Committee. This was led by Sir John Wolfe-Barry, the man who designed London's Tower Bridge. And if anybody's fortunate enough or deserving enough to get the award, the Wolfe-Barry Award from BSI tomorrow, that esteemed honor goes to is named after Sir John Wolfe-Barry. So what they were doing, this group, were trying to reduce the number of tram lines available. So they met, they had consensus, and they were very successful in reducing it from, say, 100 to 10. Monumental achievement at that time, which today is what standards is all about. The BSI group changed. There was a couple of key moments when we received a royal charter in 1929, and in 1998 there was a revision to the charter that enabled the group to diversify, to acquire other businesses, and then the trading name was BSI Group. So that's what it is now. What you see at the bottom right here is a kite mark. I put that in there because it's an old kite mark, it's one of the oldest in the country. 1903 it was first registered, and it's recognized by 82% of adults in the UK. BSI is the country's only national standards body. So every country has a national standards body. Axel from Trinidad and Tobago, they have their own national standards body, the TTPS. So, but BSI is not part of the government. It works very closely with the government and government departments in order to further public interest, in particular BAYS, but it's not officially part of the government. Just before I hand over to Axel, just to mention that the standard BS ISO 37000 governance of organization, as with all standards, it's an agreed, repeatable way of doing things. And in this case, it's an ISO, so it went to the ISO. We'd like to think of the other contributors to what it was based on, this standard, but 13500 was what the BSI submitted the Newark item proposal on that basis. Of course, there was other contributions as part of the ISO process. And after a number of years, I think it might have been 5 even, it's not unusual to have it take years and even up to 5 years for new aspirational good practice documents such as the governance. So, but it did take a lot of hard work and toil, and so give credit to the committee members who were stood there through those years. It's voluntary basis and continued to contribute and make it the quality document that it is. The standard published in September, and if you want to find out more about that standard, or more in particular, if you'd like to become a standards maker, BSI committee member, you want to get involved, then I would encourage you please to look at the Google BSI, becoming a standards maker, and you'll see you getting involved there, and that despite the roles, responsibilities, and the benefits of being a committee member. The BSI don't charge. You may say, well, they're giving up my time voluntarily. That's absolutely true. So recognizing that and other things, BSI don't charge, but in turn, you're not paid for your services. So it is voluntary. And so it is very grateful that we bring people together, have their voluntary contribution. I'm the secretary for committee G1, and that's on governance. And if you had any questions about this presentation, the standard, please feel free to send me a quick email. And then I'll turn it over now, because I say we're very fortunate to have Axel. He really is a leading expert in the area of governance. He and his co-chair, Dr. Victoria Hirth, did a simply amazing job in bringing the group together at ISO over those years. It was a lot of challenges, and together as a team, they really prospered. They did a fantastic job. So my hats off to them. And I've been doing standardization for 20 years. So I think it was one of the most challenging, but possibly one of the most rewarding projects that I've been involved with. So Axel, Dr. Axel Kravatsky, you're about ready to share your screen. That's your cue up. I'm going to stop sharing. I'm going to read you your intro, and as you play with that. Dr. Axel Kravatsky is a managing partner of Integra ESG, advising and guiding leaders on how to develop, activate, and amplify the power of their brand and the people to positively impact society and the natural environment profitably. As the practice lead for purposeful governance and strategy, he's been working with boards of directors, board committees, and executives for over 20 years. His specialities are the financial, state-owned enterprise, utilities, and non-for-profit sectors. As I mentioned a little bit earlier, Axel, he's not only involved with the TC Working Group 1, where they developed 37,000 standard we're talking about in governance here, but he did such a good job. He's been rewarded or condemned now as the vice chair of the entire technical committee. So now vice chair of TC 309 Organization of Governance. So well done and congratulations on that recent appointment, Axel. Axel was the founding chairman of the Caribbean Corporate Governance Institute, the CCGI, initiated the development of the Trinidad and Tobago Corporate Governance Code in 2013, and led the development of the first and only accredited corporate governance training program in the Caribbean region. Axel's worked in the Caribbean, Europe, and USA with senior managers and board members on leadership development, as well as consultants to boards and governments on corporate governance reform. He was the lead World Bank finance consultant for the Ministry of Public Finance in Romania, drafting the methodological norms for the selection process of directors of state enterprises in Romania. Axel is an experienced non-executive director and a member of the European Corporate Governance Institute and the Romanian Association of Independent Directors. So with that, turn you over to Axel. Thank you, Axel.
Okay, great. Thank you, Dave. I have put together a few slides and a short presentation, and then welcome all questions, of course. But I thought it would be useful to highlight some of the key current trends in governance, and then specifically how ISO responds to that, and how ISO becomes an instrument in order to respond and enable organizations to fulfill their purpose and respond to the needs and that have been put to them now by society and markets. And then I'm going to look specifically at some highlights within ISO 37000, integrated governance, the whole governance architecture, and then I'm going to focus on a few of the principles, highlighting in the end one specific one, just a little bit more depth, oversight. So the main things that you would notice now in the media and in the markets happening is that it is becoming very important for organizations to take into account all kinds of stakeholders. And so this was notably in 2019, the US Business Roundtable said that we are committed to all our stakeholders. You will have not missed the fact that environmental, social, and governance issues are now rising exponentially in importance in the investment community. And the majority of funds, probably very soon, it's probably in Europe, it is, I think it just tipped over 50%, but it is still rising in terms of investments allocated according to the environmental, social, and governance impact. And 37,000 really speaks a lot to these kind of dimensions. And finally, another big trend that you would find in a number of guidance documents that are country-specific and institution-specific. They are calling for purpose of the organization to come into the center and organizations to be purpose-directed. So in the light of these general wider trends and expectations of organizations, ISO 37000 is the instrument through which organizations can fulfill their role, all kind of organizations. Specifically, it is the first global standard on governance. Okay, so secondly, it is becoming thereby also the benchmark on how to put purpose at the center of governance, so that the organizations are directed ethically, responsibly, and effectively. It is also fundamental. It provides fundamental ingredients, such as, for example, internal control system, assurance system, risk governance. These are essential elements that are necessary in all kind of organizations and all governance. And here, for the first time, for example, an internal control system is clearly defined and outlined. Given the proliferation of expectations and guidance relating to the governance of organizations, 37,000 reduces the complexity and thereby also the costs, while increasing the transparency and comparability across countries and organizations, particularly now when collaboration across borders, across industries, across different types of organization is becoming ever more essential. And it is international. Within TC 309, 77 countries were involved, 24 international organizations, liaison organizations. It had a wide representation to build this international consensus. So some of the reasons why it is worth for organizations to adopt this particular standard is that one element is that it's the first that provides a fully worked out view of integrated governance. And that means that the terminology is clear, there's consistency, there's a necessary differentiation between different kind of roles within governance. And having that clarity allows us to organizations to develop agility, resilience, so that they're able to generate value and thereby then fulfill their purpose. And by fulfilling their purpose, contributing to sustainability. So having a world consensus on what is organizational governance. Organizations are well defined within the standards world, but governing bodies are was quite a lot of work to be clear exactly what is a governing body, how does it relate to boards, how does it relate to other kind of forms in organizations, and to agree and be able to define so that every organization, no matter what, has a governing body. It doesn't have to be called a board of directors, but there's a specific differentiation between an organizational entity, a legal entity, and other types of organizations that also can reside within a legal entity. And so therefore, all these other organizations have governing groups. So being able to differentiate these aspects between governing bodies and governing groups and how that relates within the entire organizational entity that is composed of several organizations and together forms organizational governance and is able to work with the across all the resources in a responsible and ethical way to achieve its purpose. That demonstration and that outline and guidance is what integrated governance is about, and it is very unique in that. Since its publication, we have received quite a number of positive endorsements by leading organizations in the field, and so this has been, of course, very welcome. So let's go a little bit deeper into 37,000 and look at the overview. Okay, the organizational architecture of what are the principles of governance. So the first thing is that the primary governance principle is purpose. Every organization has a purpose, and it is the responsibility of the governing body to articulate this purpose. On the basis of this purpose, you are then able to articulate and interpret that further and define how you generate, how the organization generates value, okay? And so there are four foundational principles: value generation, strategy, oversight, and accountability. And they are supported by 6 enabling governance principles, which is stakeholder engagement, leadership, data and decisions, risk governance, social responsibility, and viability and performance over time. Together, by applying these principles, organizations will achieve 3 governance outcomes. They're going to be performing effectively, they're going to behave ethically, and they are responsible stewards of the resources that they are engaging in this process. So if we look at the purpose principle, the purpose is articulated by the governing body. It defines and elaborates a meaningful, relevant purpose for the organization. And that is the reason the organization exists. And the standard gives quite detailed guidance on relevant practices. I have not come across another document that gives more guidance on how to articulate and how to embed purpose within an organization. So, specifically then, for example, there are quite a few new codes and regulations that require organizations to articulate a purpose statement. And here there is guidance on what this document is. It specifies and how to develop it and how to embed it in the organization. And it speaks to the ultimate value that the organization is generating. When you come to value generation, having a clearly articulated model for how the organization generates value is the basis for it to innovate and to collaborate with stakeholders, because you're articulating it is in relation to these stakeholders that we are creating value. That is what we define by value. And these are the parameters in which this value generation needs to take place. These parameters are defined in conjunction with and in consultation with stakeholders and those for whom you develop this value. And then you oversee and ensure that the value generation actually takes place. And you sustain the ability of the organization to generate value by having a way to distribute this value on a sustainable basis. Oversight is a long established principle. It used to be, many people refer to this as control, but the view is that oversight is a more accurate and apt and useful notion for what is actually taking place in governance, because you oversee and take corrective actions, and in the process you're using controls. Okay, so elaborating exactly how that works, I will dive into that a little bit deeper at the end of the presentation in a couple of minutes. The next foundational principle is accountability, because accountability engenders trust and legitimacy, and we need that. All organizations need that in order to generate value and positive outcomes. And it is demonstrated through reports, disclosure, and effective stakeholder engagement. And on the basis of these engagements, to demonstrate how you're improving the organization and taking this into account. So it's very important that the governing body is responsible for and accountable to the entire organization. So the governing body can delegate, but it retains accountability to for everything that it has delegated and to the organization as a whole, and it accounts to stakeholders outside the organization and is willing to do so. Stakeholder engagement is an important enabling principle, and the 37,000 gives guidance on how to identify and the practices associated with effective stakeholder engagement, particularly from the perspective of governing bodies, because there are other standards that elaborate more wider stakeholder engagement processes, for example, relating to social responsibility. Risk governance is, of course, a very important organizational practice, but most of the time we're thinking about organizational risk management. And in these standards, we are clearly articulating what risk governance is about. And risk governance is critical for organizational governing bodies to practice, because value is generated when appropriate risks are taken, transferred, or shared in a timely manner. So this, in order for that to happen, governing bodies need to balance risk effectively. And all organizations are exposed to risk. But it is not only with respect to achieving, risk is not only the effect of uncertainty on achieving specific objectives, but it is also the effect uncertainty has on achieving the purpose of the organization. And the governing body sets the tone through a risk management framework within which it articulates, for example, the risk appetite, its risk appetite, the governance body risk appetite, which acts as guidance for the entire organization. The governing body applies risk management to its own activities, and it oversees risk management in the entire organization. So let's dive a little bit deeper into one of these aspects about oversight, okay? And so, because one of the nice elements of this, the reason I'm choosing this is because it also links nicely with other standards, and it shows how governance and other standards within ISO and within the ISO system nicely complement and form a useful tool package through which organizations are able to fulfill their roles. So oversight includes the effective supervision and control, and is based on timely and accurate management reporting, effective controls and assurance processes, and the implementation of corrective action. Okay, so you delegate effectively, and the standard gives, I think, also quite uniquely guidance on the elements of effective delegation, because if those are not done well, if the delegation is not happening well, then much of organizational performance is hampered, and accountability is almost impossible to properly achieve. And of course, we know that, for example, assurance plays an important role. So many organizations have, for example, internal audit and external audit functions, but exactly how that works together in the governance system, and to demonstrate and know that all organizations, whether or not they have internal audit functions, every governing body needs an assurance system. And here we provide the guidance for what it needs to cover and how it can do that. So in the assurance aspects, it consists of a number of different elements and processes. So there are audits. Now, it is important to realize that audits are not only conducted by other bodies. It doesn't have to be an internal audit department. In larger organizations, it will have to be something equivalent to it, because the governing body needs to have independent verification of that which is being reported to it in the official channels. So anybody who delegates and receives reports in return needs to also know what is going on in reality. Are these written reports and verbal reports, are they consistent with the general picture and what else is going on in the organization? And so from non-profit, maybe smaller organizations, to larger non-profits, to utilities, to universities, to all kinds of organizations, this audit process is very important to assurance, and therefore to oversight, and thereby to governance. Okay, and of course we're all familiar with external audits as well. Now, the reporting, the highlight here would be that it is of course expected that those to whom you delegate will report back to those who have given that delegation about how they are interpreting their mandates, what standards or what benchmarks they're using for their own performance, and how they are practically doing against this. And so that is normally expected. What is also clear in this governance system is that risk management, compliance management, and internal audit, all three are expected to be reporting directly to the governing body, or that the governing body has direct meetings with them. Internal audit, of course, is literally reporting directly to the, has the primary line to the governing body, and the dotted line administratively to the CEO or the top in the organization. Whereas risk management and compliance are management functions, and are primarily reporting through the management route, but the governing body should have direct meetings with these two functions so that they're better understanding the organizational issues. It's not to undermine the authority of the CEO. So that is kept clear, but there should be direct meetings. And in many organizations, these areas are blurred and people are not sure, and it's not all that clear. So now there is, I think, great clarity about that. And of course, in order for a compliance system to be able to work and the organization to assure itself and others that it is able to implement and fulfill its obligations, both legal obligations as well as obligations that it had adopted in relation to specific stakeholders, it's important for there to be a whistleblowing process. And in that respect, it is good to have 37002, which provides very clear and useful guidance for how to set up a whistleblowing system so that it works effectively. So let's look at another picture about this process of oversight. Okay, so part of the activity of oversight, which includes receiving reports and taking corrective action. Part of that process is that the governing body should ensure that it establishes an internal control system that consists at minimum of risk management, compliance management, and a system of financial controls. This entire system needs to be assured through direct reports, external audits, and a whistleblowing process. So this elaborates graphically that which I have mentioned before. So let's look also at some of some practical highlights, practical implications that you would expect governing bodies that adopt 37000 as their standard. What are some of the things that you would be able to notice? And so they will develop a purpose statement. So all organizations that apply 37000 should have a properly developed purpose statement. And in this way, they're fulfilling many other guidance on governance that exists. But if you are currently reviewing the reporting and disclosures of these organizations, those purpose statements are sometimes missing, sometimes combined with vision, missions, and other things, but it is not always very clear exactly what it is. So now that should be much clearer. A value generation model, which is distinct and complementing a business model. It's not the same thing. Here we're looking at how value is generated, and the business model then also speaks about the activities and the processes and the channels for delivery and partnerships, all these different elements that might be part of a business model. The value generation model is from the perspective of governing the organization, and it lays it out who the stakeholders, what is value, which stakeholders to produce this for, what are the parameters, how do we oversee it, and how do we sustain it. You would expect to find an integrated governance framework that enables organizations to be responsible steward of all the capitals that they're employing in the process and that they're affecting through their activities. So being able to integrate that perspective of impact on capitals and how they're being used effectively within established limits of with respect to these capitals. So, for example, if we take, for example, in relation to climate change, that is why it is important for organizations, for governing bodies, using this integrated governance framework, it becomes clear where and how they need to establish the organization's commitment to climate change and at what rate this reduction in carbonization of their activities ought to happen. And through, for example, science-based targets. So it would be the domain would be greenhouse gases and our effect through them on climate change. We would establish specific limits that the organization needs to be able to work with. And we will combine this, for example, with nature-based solutions on impact on biodiversity. Together, they work to with the impact on people and so forth and financial capital. Together, it's integrating that part across the entire organization. That is what an integrated governance framework includes and is distinguished. Then you have an organization of risk framework that has clearly the role of the governing body and management in it. And then you have an internal control system that I've described before. Then you would be clear as to what the delegations, what the principles of effective delegations are. And that also includes your relations, for example, with member stakeholders, like, for example, shareholders or ministries or other organizations that you report to. These reporting relationships are extremely important for governance, and they're often fraught with unclarity. So now, and even the process for how to generate them. So in utilities, state enterprises, all these domains, this is a very, and family businesses, sporting bodies, this is a very important element for governing bodies in terms of dealing with their external stakeholders, and including internal then. And then, of course, accountability and disclosure is not only about complying and demonstrating compliance with legal and voluntary compliance requirements, but it's a process of engagement and having meaningful relationships. So to do all these things, the standard helps by, for example, not only articulating the principles, which I've outlined very briefly, but it also helps by articulating clear terminology that is consistent and also introduces some new elements so that the grammar, as it were, of governance is clarified and improved. So from the perspective of governance, all organizations, of course, have stakeholders. Now, but from the perspective of governance, it's particularly important to be 37,000 is useful in that it makes a distinction between relevant stakeholders, for which the governing body should articulate criteria for, okay, who are these relevant stakeholders? So we're not accountable to just everything, or we're not accounting to all stakeholders, but we are to the relevant stakeholders, and we're taking their particular perspectives into account. So who and how. Then, but there are always going to be member stakeholders for the organizations, and these member stakeholders sometimes in some organizational forms are shareholders, but it is important that it is not only and not always shareholders, and that there are other types of organizations that don't have shareholders, but they do have member stakeholders. So that's what they all have in common. And there is a legal relationship between these member stakeholders and the organization and the role they play in governance. And then organizations can choose their own reference stakeholders that they take into account in determining their purpose. So being able to differentiate this is very important and useful. And of course, I've already mentioned the difference between governing bodies and governing groups and how they are important for integrated governance to be able to fulfill the organization's purpose. It may be obvious, but there should be, and now there is, a definition of what organizational governance is in a succinct, clear, and now internationally agreed manner. And it's a human-based system through which organizations are directed, overseen, and held accountable for fulfilling a specified purpose. Okay, so there are all the key ingredients there. And then what is a governance framework? A lot of guidance says that, you know, there should be an organizational framework, but then don't give that much guidance for exactly what the components are and how to put it together. And then it is also not common to speak really of the outcomes of governance. Why? What are the outcomes? How do we know that there is good governance from the perspective of outcomes rather than just process? And so that is now also articulated in a clear and succinct and international agreed way. So these are some of the highlights, some of the areas, and I welcome any questions that you might have, and I can elaborate on any aspects that you would like. Thank you.
Thank you, Axel. That was terrific, and you're right on time too. That allows us maybe 10 minutes for questions and answers. So I won't go in order. I'll just start off with Richard Jones, who's a committee member at BSI. Hi, Axel. Do you agree that COVID-19 and climate change are helping to drive the demand for a new social license? Sorry, I just got to pop up right in the middle of my question here. Can you read it, Axel?
Sorry, I can't actually.
Hi, Axel. Do you agree that COVID-19?
I'm sorry, I can. Sorry, I can. I know I can. Sorry, okay. I pulled up the question.
Demand for a new social license to operate and govern, and underlining the importance of 37,000. So it's that last question.
Yes. So the answer is, the answer is a clear yes. And this topic, of course, has been discussed for a very long time, and because organizations are in whatever form, if they are legal bodies, of course, they are the laws, which are agreements amongst people through their representatives, reflect social expectations and give a social license, and organizations are operating within that license. And it is important also that they account to those who have given them that license, which is the general populace. And it is not only one stakeholder group, which may be sometimes, the member stakeholders that have a specific legal relationship specified, though the others are often also specified in the Companies Act and other acts. But for a variety of reasons, some of these stakeholders, like, for example, shareholders, have been interpreted to have more, greater relevance than others. And I think that is the part that is changing dramatically, that both in terms of interpretation, expectations, and legislative guidance, codes, or in all domains, this is changing. And of course, it is not only because of the damage that organizations are creating. So if it is true that, for example, about 80% of all greenhouse gases are emitted by organizations, then of course they have a role to play in mitigating that and changing that. But they're also required in order to create the solutions for a changing world in which people and the planet have many issues and problems for which we need to find solutions. And COVID-19 is maybe one of those elements that virologists have predicted would happen for a long time, because of the environmental changes and the closer connection between people and nature. And it's the responsibility that organizations have there to generate value, to protect their people and those to whom they serve, of course, are all very important. Yeah, so this has been a great accelerator. and it is, and I think ISO 37000 is fully consistent with the new expectations.
Mm-hmm. Okay, thank you. So let's look at Anita Punwani. She was involved in the ISO, especially at the early stages. She would recall the discussion, the decision early on to call the guidance a governance of organizations rather than corporate governance, which has caused a lot of confusion, even in terms of getting the new work item proposal off the table. People really objected to corporate governance, but when we said it's governance of organizations, it seemed to make people feel much more comfortable. She says, I think this sends a very important message, notably in stating, as you say, that it relates to all types of organizations, but also its place in global governance. So the question is, what is your view of the role of standards in global governance?
Yeah. Definitely, I think that there's a technical element to it, which in the sense that corporate normally then refers to corporate bodies, and not all organizations are corporate bodies. So that's the technical aspect to it. And but then there's also the cultural and the interpretation aspect for what it actually signifies. And given that a lot of corporate governance discussion, a lot of the discussion around governance related to organizations has been dominated by both the quantity as well as the strength of the voice of certain kinds of organization in certain kinds of contexts. So frequently public organizations or publicly traded organizations that maybe of the larger type, and maybe the differentiation between the Anglo-Saxon and other kind of contexts. So some have had a much stronger influence, and the prescriptions that the regulators and legislation has for those kind of organizations has come to be associated with governance, the act of governing for generally, and people, there's a confusion or a fusion between what is appropriate for some to be then taken to be appropriate for all. And of course, that is not quite the case. And so therefore, this standard has built it much more ground up to say, okay, in all kind of organizations, what are the basic principles? And on the basis of these basic principles, then we can go into specific kind of organizational forms if there is demand for that. And right now, 37,000 is that general one that is not specific and that is trying to move away from specific interpretations that may not be appropriate for all. So that, and then as it relates to global governance, of course, when it comes to organizations being involved in those processes, then it would apply to them. But I think there are additional dimensions as it relates to global governance that go beyond the organizational form specifically. And so I think there are additional elements that is not quite within this scope. Then I'm not the best person to exactly speak of that, but I know that there is specific research and work on global governance topics, such as the Grantham Institute at the London School of Economics that has this as its focus, but it's not my expertise.
Just a quick one on that, a follow-up with how does this standard, how do you think 37,000? I mean, there was the King 4, was it the King 5, which 4, it had a huge impact on this as well as any other British standards and whatnot. But now that it's published, where do you see the place of this standard fitting in with existing legislation and maybe even other standards? I mean, we know that 26,000 on social responsibility is quite an important standard. And I do have to watch the time. We've only got 1 minute left. But how do you see it? Where's the place of this, of 37,000?
Yeah. So the way one way of thinking of it is that we have supranational legislation, for example, then which is mandatory. Then below that you have national legislation. Below that you have mandatory regulations, for example, for listing or other utilities or other contexts. Below that you have voluntary guidance. And this ISO falls within this voluntary guidance. So there are some, for example, if you list it on the stock exchange, then in South Africa, then you have to apply King 4. But this is enabling you to work with King 4, to apply the principles of King 4. It elaborates some, but it is, you would take always precedence for that which is of higher precedent order.
Legislation or laws, yeah.
And it enables you, the ISO system in general enables you to apply these higher ones, and by developing the policies and systems within your organization. So it's practically oriented to enable you to do those other ones as well.
All right.
And
complementing it, those other things. Hopefully it fits in very well indeed, because it has been called a landmark standard, for which I will once again congratulate you for, sir, as chair of that group that developed that standard. I want to thank you, Axel, and thank the committee members, and thank the people for listening in today. So
I thank Anita and all the other members who were part of this kind of process as well.
Indeed. Okay, so I think that wraps us up. Thank you very much. Thanks, everyone. Have a good remainder of your day.